Around, I don't think Bharti will go through the same problems they faced in South Africa. They've done more of a due diligence, and they've gone to the major markets and spoken to most of the regulators, your Nigerian market, especially the Nigerian market, where there might be a bit of issue with Econet wireless, which they are trying to actually clear out before they complete the deal. So in terms of regulations, they'll just go for the normal approvals that they have to go get from all the regulators around, and they've been trotting around getting some of those approvals, or tentatively getting some of those approvals. But the mood inside Bharti itself is this deal actually will sail through smoothly.
All right, now at the beginning of the week, Bharti tied up $8.3 billion towards it. It gave assurances that there'd been, in fact, oversubscription from various international banks in terms of financing the transaction. The remaining $1 billion is tied up into Zain's books. Just tell us how this transaction, or how this deal's been structured, and how the transaction will eventually look in the end.
If you look at reports coming from the credit rating company in India, I think it's Serious, and you find it's going to be a high debt purchase. Basically, it's going to be financed through debt. If you remember Bharti for the MTN deal, they had already gotten close to $23 billion financing arrangements with a number of banks, which had formed a syndicate to finance them. So getting financing this time around for this acquisition was not that difficult. They're riding basically on the previous arrangements. Bharti itself has like 1.5 billion in reserves, which I think they will also try and use in this purchase. So it basically will be close to 80%, 90% debt. They will also try and use the balance sheet of the Zain Africa operations, which I think the revenues from the Zain operations are close to about 3.6 billion. Right. So they try to use the strength of that balance sheet to get some financing. All
right. Now they're buying into assets in Zain's operations in 15 African countries, but this is not the first time that Zain's been courted by major telecoms giants. When companies like Vivendi were looking to buy into Zain, they weren't prepared to pay as much as $10 billion, because the argument at the time was that Zain's network is somewhat inferior. Is Bharti aware of some of these concerns about Zain's infrastructure, and how are they going to get around it?
I think Bharti knows. Their proprietor is a very cunning and good investor, actually. And I think the bet on Zain this time is actually maybe not on the infrastructure. Bharti is betting on Africa's growth. You know, Africa, most of the penetration rates in Africa are actually in single digits for most of the major countries which Zain are in. So you've, apart maybe from your Nigeria and a bit of Kenya. So they're betting on the growth of the telecoms market in Africa, and that's why there's a lot of appetite for it. So that's one thing Bharti is betting on. The other thing, they're also betting on the ability to turn around Zain's operations. How good they will be in that, well, that we'll just have to wait and see.
Okay, so let's assume that everything's on track, the deal is concluded, and in the next few days the paperwork will be done. Zain's going to, or Bharti's going to need to hit the ground running, but it seems as though they're going to need to do a lot of capital expenditure in terms of upgrading Zain's network, rebranding, formulating new products, because especially in East Africa, it's a highly competitive space for data services, for mobile banking, those sorts of things.
In terms of technical capabilities, I do not doubt that Bharti has it. I don't know whether they have taken into consideration that maybe the technology they use in India, like especially sharing a mast or putting one mast to cover a large distance. The problem that in Africa, mobile users are not highly concentrated in one area. They're so sparsely populated. So they will have to spend in trying to build the network and build more masts, because I don't think the Indian style will really come and help them when we come to African countries, because of the way the population is sparsely populated. So in the aspect of capex, they will actually have to spend quite a lot, and I don't know how they'll fund that one now.